Hi, I'm Julia from Shortlisted Productions. Today we continue with our FinTech series and we're happy to present our first FinTech company profile snapshot. We had an opportunity to interview the founders of Scalable Capital, one of the fastest growing wealth tech investment managers. In this episode you will learn about how the company was started, about their service and also about the clients which the company is targeting. Imagine if you worked for a bank and all your friends and family were asking you where to invest their money. What would you do? Well, for the founders of this startup, it was a no-brainer.
What we thought was, why is there not this kind of turnkey solution, one-stop, low-cost, highly accessible service online that I can send my friends to? And it was a bit embarrassing that there wasn't this service, so we thought, all right, let's create it. And you know, it seems funny to look back now and think that it was kind of to solve a problem that our family and friends had, but it really was. There's nothing like what we're doing in the market, which we felt was high enough quality. If you wanted to get access to a high-end wealth manager, you'd need several $100,000 at least, and not everyone has that kind of money. And then if you wanted to do it yourself, you were talking about hours and hours of research.
It's not appropriate to suggest to friends and family, yes, you should run a spreadsheet, you should invest like this, or you try and give a recommendation, you should invest in this right now. And that's really not the best way to do things. We wanted to find a solution where we could say, you know what, you should put your money with this institution, with this service, and they're going to take care of everything for you. So that's what we set about trying to create.
Our product is potentially suitable for a big share of the population. But if we went after all of those people now, I think we'd be wasting a lot of our money. So what we are doing instead is we basically identified who our early adopters are going to be. And we think these are, people that have an affinity for tech, people that are probably around in their 40s, so that they have enough money to invest. They probably have made experience with investing already, so they understand, all the benefits of our service without us having to say and explain that much. They're probably rather male than female. And they probably have a very high level of education typically, so they're high earners. So this is our sort of core sort of personality that we're looking for right now, and we know that when we can reach them, if they love our product, our service, they are going to recommend us to their friends, and their friends are probably going to trust them for sort of financial advice.
We know that we have a sophisticated investment model, but at the same time, we know that we're providing a service which is more accessible and has a very clean, easy user experience. So I think over time, we'll see our clients broaden out. For now, obviously, we're more than happy to have what seems to be a group that we found, which is, like you say, average sort of 45, with average investments of around 40,000.
In essence, it's a wealth manager. So we're looking to provide investment solutions for people's long-term investment needs. So for retirement, or for that luxury holiday in the future, or that home purchase.
We provide an online investment management service. So what we mean by that is, so for a client, we will manage their money on a discretionary basis. So a client comes to us, they invest money based on a risk tolerance that we determine them to have. And we then invest their money into capital markets, and we manage it on an ongoing basis. So we create the portfolio for them, and then we manage it over time.
ETFs, they're a fantastic vehicle because they do exactly what you just said. They replicate indices, and they do it in a very low-cost way. But they're also very transparent, so you can see exactly what they're holding. And they're very flexible. You can buy and sell them during the day. So if you think of what an index fund, like an index mutual fund, which has all of the qualities, low cost, it tracks an index, but you can't trade it during the day, an ETF is just the next manifestation of that. So it just adds more flexibility. So it's kind of an index fund plus, if you will. The problem with ETFs is, however, that there's 1,500 of them for a UK investor. So picking the best ETFs is a problem. And that's part of the process that we do. So we run a screener against all 1,500 ETFs, and we find the best ones. So we find the ones which are the most low cost, the ones which are the most liquid, the ones which cover the most asset classes in terms of diversification. And then we use those as the building blocks to then build an individual client's portfolio. But you wouldn't be able to do that with actively traded funds as such, because they're really expensive and they underperform the market. So ETFs are really one of the key technological improvements in the financial markets over the last 10 or so years in Europe, which enables us to do what we do. I would say that and cloud computing. Without ETFs and without cloud computing, we wouldn't be able to do what we're doing today.
Shortlisted Productions specialise in the production of business video content for corporate clients. Please contact us for a free quote at shortlistedproductions.com.